A few months ago, I shared the full coding of a high-frequency trading robot. I applied it once in the live trading environment and broadcast it. In the video, I promised that if and whenever I will make some modifications to the EA, that I will definitely share it, but my health so far didn't allow me to do so. But now that I'm starting to post again, before I share more full coding tutorials, I thought I will start with sharing the modifications that I want to apply to this EA, which is the aggressive trading stop loss from the scalping EA. It just makes sense for me to want to try that change. This HFT EA is an aggressive trading bot. So aggressive trading, as soon as we get into the profit territory, just makes sense to me, and it actually might work. Now, I haven't tried it, but I want to. And if you want to try it with me as well, get your laptop, make a cup of coffee, and let's start to code it. Number one, the EA is supposed to be applied for a very small period of time. The EA generates so many orders and modifications that if you leave it on for a longer period of time, your broker is going to ban you. Number two, the EA is logically designed for a very high momentum period, like news or market open times. So it probably will work best when the market is moving in one direction with a very high momentum. During dull times, it's going to eat away at your profit like your girlfriend with a credit card. Number three, it's going to generate a lot of trades. So logically, you want to apply it to pairs or asset classes where the spreads are very low. Otherwise, your broker is going to get rich. Also, remember to choose pairs that have high momentum. I tried it on gold, but I might want to try it on Dow Jones and Bitcoin when I see strong momentum. Number four, a friend of mine shared this trading bot with me. I haven't used it fully. I'm not advocating that you use it and become an overnight millionaire. No, I'm just sharing what I have and what I find interesting. I don't know what will happen, how it will perform, and I cannot predict the future. With all that said, with no more shenanigans, let's start coding. Let's start with the year where we left it off. So this is the original code my friend shared with me, and this is what I've shared in this video. And let's start to make changes to it. So today we're going to add the trailing stop loss to it. So after our inputs from the last time, we're going to add one more section, and we're going to call it the trailing stop loss management. And here we're going to create an enum. If you have been following my videos, you know why we create an enum. So we can have this drop down, which is the default trailing, scalping, previous candle, and fast MA and 10%. That's what we are writing here. So default trailing is 0, which is the original trailing stop loss, which the friend shared with me. Then we are going to add to it a scalping trail, a previous candle trail, a fast moving average trail, and using the Ichimoku, a 10% trail. That's what we have added into the scalping robot, and that's what we're going to add to this as well. Once we have this enum, now we can use it. So we say input TSL type, which is using this enum, and then we create a variable by the name of trail type. And we're going to call it 1. So scalping trail is the default now. So once you compile, you will be able to see here this trailing, this default trailing drop down will appear in the input tab. These are the original inputs, and now we have added the trailing stop loss management to it as well. Now, if the user selects the trailing of the stop loss to be scalping, then we need to ask the user what is the trigger point, how much the trade needs to be in profit before the trailing of the stop loss is triggered. And when it is triggered, by how much distance are we trailing the stop loss to the price? So 15 will basically mean that once the trade has moved into profit by 1.5 pip, that's when the trailing stop loss will trigger. And 10 means the actual trailing of the stop loss is going to be kept at a distance of 1 pip from the current price. Now, if the user selects previous candle or fast MA or 10%, then we need to create variables for that as well. So we're going to create more sections, and we're going to say if the trailing is by previous candle, then you need to define how many candles does it need to be trailed on. So 1 will mean on the last candle, 2 will mean last on last candle, and so on and so forth. And if the trailing is by fast moving average, then we ask the user to define what is the fast moving average period. So is it a 50 EMA, 5 EMA, 2 EMA, 10 EMA? What is the mode? Is it simple or exponential moving average? And what is the applied price type? Is it median or close, etc., etc.? Now, if I compile it again and we go back, now we're going to see here after this, these sections also appear. So in points, if you have selected the scalping trailing type, then you need to define this. If you have selected previous candles, then you need to define here how many candles to trail it by. And if you have selected the trailing by fast moving average, then you need to define what is the period for that fast moving average. Is it exponential, simple, smoother, linear? And what is the price type? Low of the price, high of the price, close of the price, open of the price, or normally the median. We have defined here the default parameters, and here the user can select. After that, we also need to create two more variables, the handle for the moving average and the handle for the Ichimoku, because we're going to be getting the information of the fast moving average based on these parameters. In case of the trailing on Tenkan-sen, we need to get the handle for Ichimoku as well. So we're going to define this here. Then we go to the on initialization function, because that's where we're going to initialize the handles for Ichimoku and fast moving average. So here I'm going to add these code. So if the trailing type is 3, which is coming back here, if the trailing type is 3, which is the fast moving average, then we need to initiate the handle for the moving average by calling the function IMA, providing it the symbol, which is the current symbol, the period, which is the current period, so whatever is on the chart. Then what is the moving average? What is the period for the moving average itself? And that is what we collected from the user here. So 5 in our case. Then the mode, which is it EMA or SMA? And then the applied price. So this is the function. So we're going to get the value of the moving average by calling this function, or initialize it in the initialization. And then if the trailing type is 4, which is the Tenkan-sen, then we need to initialize the handle for Ichimoku. So we get Ichimoku, providing it the current symbol, so whatever is on the chart for the current time period, whatever is the time frame for the chart, and getting for the values of 9, 26, and 52, which are the generic standard for the Ichimoku, 9, 26, and 52 periods. And then if we go down to our onTick function, you will see within the onTick function, here we have the codes for processing the open positions, which was within the onTick function, processing the open position for pi type and for cell types. And now, because we are creating 5 different types of trailing, we cannot continue to build the code within the onTick function because it's going to become too big. So we're going to go down to the bottom and we're going to create a separate function, and let's call it trail stop. So this is going to be the function where we're going to create all of the conditions around the trailing of the stop loss, and then we're going to call this function from the onTick function on every tick. So the first thing I'm going to do is I'm going to go up to where we were processing all of the open positions, and I'm going to cut paste the entire thing. So I'm going to cut it from here and I'm going to paste it within the trailing of the stop loss function. So now this processing of the open position, which was the default, which came with the code that my friend shared with me, we copy paste it here. So now it's part of this function. And now, because we are creating 5 different types and we have given it certain numbers which the user can select, up here, which is the default trailing, which is the original code, is 0, scalping is 1, previous candle is 2, fast MA is 3, and Tenkan-sen is 4. So now these codes should only be run when the original trailing method is selected. Here, the default trail. And this we're going to achieve by saying here that if the trailing type is 0, then only run all of these codes. So everything within this is going to be run only when the trail type is 0. Now we open this parenthesis, so we need to close it as well. So after this line, I'm going to close it. And let's just click here to make sure that this one is properly closed. So I see here and here that these two are properly matching and these are closed. And before we go on to the other conditions, what we need to do here is say return, which is if the trailing type is 0, which is the default, then you run all of these codes until here, and then you return. You mean you exit this function, you don't go below. Because if the trail type is 0, you just simply run these codes and then you exit the function. You don't run the codes for scalping trailing, fast moving average trailing, Tenkan-sen trailing, and those kind of things. And this is why we say here return, so that after all of these codes are run, we exit the function. But if the trailing type is not 0, all of this is not going to be run. The system is going to come here, and this is where we're going to start to build the version 2 changes. We're going to start by creating some variables. So a stop loss as a double means it will have decimal values. And we're starting it with a value of 0. Same for TP. The ask price is going to be equal to symbol ask price, whatever is the current chart, the ask price of that. And bid is going to be whatever is on the current chart, the bid price of that. And we're also checking for the stop levels. What are the stop levels? So how much gap does the broker require the trailing stop loss to be from the price which is currently in the market? Some brokers allow 0, so you can set the trailing stop loss immediately below. But some brokers require that you have distance like 1 pip, 2 pip of the stop loss from the current price. So we're going to check for that. And then the last variable I'm creating is indicator buffer, and it's an array variable, meaning it can store more than one value at a time. And we're going to create it as a double so it can store decimal places. So with these, I'm going to loop through all of the current positions which are open. So we do that by starting a for and creating another variable by the name I as an integer and saying whatever is the total positions, so however many positions are open currently, -1. So the value starts at 1 low, because the loops run from 0 to whatever number. So if there are 5 positions open, the loop is going to run for 0, 1, 2, 3, and 4. So you need to go total positions -1, because 0 should also be included. And then we say as long as the value of the I is greater than or equal to 0, and on every iteration reduce it by 1 by saying I minus minus. I minus minus basically means whatever is the value of I minus 1. So start from 4, then 3, then 2, then 1, then 0. And then on the next iteration is going to be -1, so it's going to be less than 0, so don't run the loop anymore. So loop through all of the positions, and then if the position select by index I, which basically means if you're successful in selecting the position and select it by index of I, so whatever, so if you're on the 4th, then the index is 4, then 3, then 2, then 1, then 0. Select it, and if you are able to select it, then get the ticket number of that position by creating a ulong variable. Ulong is a long number, creating a variable ticket and assigning to it the position info.ticket. So whatever is the position, whatever position is selected, the ticket number of that. Then if the position info magic number, so selected positions magic number equals to our magic number, which is here, the user defines it. So if the magic number is input magic number, so provided by us, and the symbol of the position is also our symbol, then we know this is our trade and on the current chart. If that is true, then first we check if it's a buy position or a sell position, because we're going to change the stop loss for a buy differently from sell. So if it's a buy position, then we check that if the bid minus the price open is greater than the TSL trigger point, meaning whatever trigger point we have set, if the price has come above it, because otherwise we're not going to change the stop loss. So if it is above this, it's time to change the stop loss now. Then the TP value, which we created here, is now going to be assigned the take profit value of the position. And now we're going to start looping through all of the types of the trailing stop loss. So if the case is 1, which is the aggressive trailing stop loss, then the stop loss becomes the current price, the bid in the market, minus the TSL point. So how much to trail it by times the points. So that will be our stop loss. And then we say break, so that if you find it to be case 1, stop loss equals this, and then you break this switching. You don't switch through the second case. But if it wasn't case 1, so if it wasn't the aggressive trail type, then you're not going to break, you're going to go to case 2. And in that case, the stop loss is going to be the low of whatever number of candles the user has defined. So if the user has defined it to be 3 candles, then on the current chart with the current symbol, get the low value of that candle, like 3 candles previous, 2 candles previous, and then break. So that's going to become the stop loss. Then in case if the switch type is 3, which is the fast moving average, then in that case, we need to copy the value of the main line from the handle trailing by moving average, which we created above and initialized here in the on initialization function. So we're going to use this handle, and for Ichimoku, we're going to use that handle. In case the value is 3, which is the fast moving average, then in that case, copy the value from the handle trailing moving average. The main line is starting at 1, get 1 value only, because we only need 1, and copy it into the indicator buffer array variable that we had created, that we have created here. And then set this indicator buffer as a series. Normally when you have more than one value, you want to set it in an order by index. And this is what it does. But because we're getting only one value, you might want to skip this if you want. But just a good practice to always set it as a series. And then the stop loss in this case is going to become whatever is the value in the indicator buffer at position 0. It goes from 0, 1, 2, 3, 4, 5. We have stored it into the indicator buffer only one value. So that's going to be at index 0. So normalize that with digits. So however many digits there are on that currency pair. So let's normalize it. And then that will become the stop loss. And then we break so that if we don't go to case 4. But if it is neither case 1 nor case 2 nor 3, then we go to case 4, which is the Ichimoku Tenkan-sen. And here, like the moving average, now we're going to use the handle Ichimoku. We're going to get the value of the Tenkan-sen line, starting position 1, only one value, and store it into the indicator buffer. Again, we set it as a series, just a good practice. And now the stop loss is going to become whatever is the indicator buffer at 0 index, which is because it's only one value, so it's going to be at 0 index. We normalize it for the number of digits for the symbols. So for example, gold has probably like 5 digits or sometimes 3. Bitcoin has 2, I guess. USD JPY has 3. Euro USD, GBP USD have 5. So we normalize it and then we break. So at the end of this switching, depending on which is the trail type, the stop loss is either going to come out to be TSL point or the previous candle value or the moving average value or the Tenkan-sen value. Or in case if it was 0, then it would be the default. So once we have gotten the value of the stop loss, we go that if the stop loss is greater than the position info stop loss, meaning whatever is the previous stop loss, now if the stop loss is higher than that for a buy position, we want to move it. And if it's not 0, because we don't want calculation to give us a 0 number, so it has to be checked that it is not 0. And then it is bigger than the price open, which means that we don't want to have the stop loss trailing below whatever was the opening price. We want it to be above the opening price. And it's not smaller than the bid. That's just a check to make sure that it is not below the current market price. Otherwise, it's just going to be rejected by the broker. If all of these conditions are met, then we change the stop loss by using the trade position info, providing it the ticket that we got here, and sending the new stop loss and sending the same TP that we got from the position info. So original take profit. Now we need to first close this parenthesis. So I'm going to close it and let's just check that this is closing the parenthesis here, and we need to close the parenthesis here as well. And this parenthesis close is for this if statement. So we are now back again to if position magic. If position magic number is our magic number and the symbol is our symbol. So this is where we are, because we have closed down this one and we have closed down this one. So now we go, else if the position type is sell, then we start by checking the same thing, which is if ask is now, because now we are looking at the sell position. So we need to look at the ask price. So if ask plus the trailing stop loss trigger point is smaller than the open price. So the ask price has moved below the opening price and it has moved more than the TSL trigger point. In that case, we will want to start trailing, and we do exactly the same thing as above. For the sell position, for the buy position, we went get the TP value. So we're gonna get the TP value again. We're gonna switch through all of the trailing types. So if it's case 1, then stop loss is whatever is the ask price plus the TSL point, because now we're in the sell position. So the trailing of the stop loss is going to be above the price. So ask plus the trailing stop loss. If it is case 2 for the trail type, which is the previous candle, then we get the high of the previous candle. Again, it's a sell position, so you want to set it at the high of the previous candle or high of whatever number of candles the user wants. If it is moving average, then we just get the moving average number. And if it is the Ichimoku, then we get the Tenkan-sen line number. So once we get those values, just like the buy position, we're now going to go if the stop loss is below the original stop loss, which we got from the position info, and it's not 0. So these calculations are not giving us a 0 value. because it can accidentally happen that you get a zero value here and then all of a sudden your stop loss becomes zero or it disappears. I mean, it's more relevant for the buy position than sell position. So for sell position, the stop loss of zero is just going to be rejected, but I'm going to check it that it's not zero and that it is below the opening price. So whatever the opening price of the trade is, it is below that. So we want to trade, and that the current stop loss that we have calculated is still above the ask. So it is still above the current market price. So the order is not going to be rejected. And then we proceed to modify exactly the same way as for the buy position by providing the ticket number, the new SL, and the old TP. The TP doesn't change. So once we are here, we need to close all the brackets properly. So I need to close this and this bracket, which I'm going to do here. So this one closes this bracket and this one closes this bracket. So now we are at bracket this one. So we need to close this as well. So we close that bracket as well. And now we are at bracket this one. So we need to close this one as well. So we close it. And now we are at bracket 4. The for loop bracket. So let's close that one as well. So now we have closed the entire looping, and now we are back again to the trail stop loss. So this last bracket is basically exiting the function. If I compile now, everything compiles properly and I don't have any error. Now that we have completed the trail stop loss function as a separate function that we can call, so let's go back above. And here where we deleted the entire section of trailing the stop loss in the previous version, this is where we're going to call the trailing stop loss. So I'm going to write here changes in V2, all trailing has been moved to trailing stop loss function, and here we call the trailing of the stop loss. So once the orders have been placed and the EA comes down here, the next thing it's going to do is process all of the open positions like before. But before, all of the codes for trailing the stop loss in the original version were here, but now we have moved it all to this new trailing the stop loss function, and this is why now we can call it here. So from here it jumps to the trail stop loss, and then it checks whether it's the trail type 0, which is the default, and in case it is the default, then it will still do exactly the same processing of the positions like before. But in case the user has selected one of the 4 new methods that we have added, then it's going to go through all of the positions and go through all of these to calculate the stop loss for the buy positions and the sell positions and change or modify that stop loss according to whatever comes from the new calculations. So this is how we're going to trail it. So this is it for our coding tutorial for including these 4 more trading types into our codes. I haven't tested it. I like the trailing stop loss of the scalping EA. This one is an extremely aggressive EA as well, just like the scalping EA. So I thought that it will make sense for me to try the trailing stop loss from the scalping EA with this EA as well and see how it does. Now, one more thing. This is the trailing stop loss from the scalping EA. And you can see how easily with one set of codes as a trail stop loss separate function and calling it within the onTick function, we can utilize it. That basically means that you can use this in any of the EAs that you currently have. If you have the codes and you want to include to any existing EA the trailing stop loss of the scalping EA, this is how you can do it. Now I'm going to do a very quick test for maybe just 1 or 2 positions. So let's put it here, a block. So if whenever the stop loss for the buy position is modified, and whenever the stop loss for the sell position is modified. The first one I'm going to check is the trailing based on a scalping EA. So if I go back here, now we have selected that. So if I start, so here the EA has stopped, and if I run this one more time, then I can come back here and I can see that the trailing is happening according to the TSL values that we have set, which is 1 pip at this point in time. So this seems to be working. So you can see that it is trailing very closely. If I go next a few more times, you can see that it is continuing to trail at the distance of 1 pip. And once again, guys, because these candles are huge candles, so these have the momentum. And this is where this EA can come alive, which is it opens the trade and very aggressively trail. So these are the kind of candles that you want to see when you want to apply this EA. Big candles in one direction or big momentum in the market. Let's quickly see if we can get a sell position as well. So you can see that the trailing is still happening. So if I continue pressing the play button, maybe we remove this here and let's go until we have a sell position. So now we have a sell position somewhere. And now I can see that for the sell position as well, the trailing is starting to trail. Once we are in profit by more than the trigger of the stop loss points, it is trailing at 1 pip difference. Let's click it a few more times to see. Yeah, it is trailing. So the code seems to be working. I'm going to put the stop here again. And now we're going to try the previous candle. So if I again go and start in the debug mode, we can see here one position has started and the EA has come to a stop here because now we are in a sell position, I think. So if I play one time next, so this is the buy position and sell position. So I can see that it is trailing at the bottom of the previous candle. So this is a new candle and it is at the bottom of the previous candle. So we have a sell position for which we are trailing at the top of the previous candle. You can see here. So this is it with the modification of the existing HFT EA, including to aid the scalping trailing stop loss method. I think after trying this for a while, I would want to make more changes to it. So once I make those changes, I will come back and I will update here as well. I will make this available in the store as well. But once again, for the store, the idea is not that you are buying an EA from me. The idea is if you don't want to write the codes yourself, you don't have time, or you're making mistakes and you're stuck somewhere, this can be used as a reference. I cannot be selling something which I'm sharing 100% completely free in the videos. It's only if you don't want to write the codes or you are unable to, or you're stuck somewhere and cannot figure it out, there is this reference help available. I have a couple more EAs that I want to share the entire coding tutorial in the coming weeks, if my health allows. So until next time guys, stay safe and trade safe.